committee decided by a majority vote to maintain the current monetary policy stance with an adjustment to the corridor as follows. 1, retain the monetary policy rate, MPR, at 27%. 2, adjust the standing facility corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. The committee's decision was underpinned by the need to sustain the progress made so far towards achieving low and stable inflation. The MPC reaffirmed its commitment to a data-driven assessment of developments and outlook to guide future policy decisions. Considerations. The committee welcomed the continued deceleration in headline inflation year on year in October 2025 for the 7th consecutive month. This favorable development resulted from several factors, including sustained monetary policy tightening, stable exchange rate, increased capital flows, and surplus current account balance. In addition, the relative stability in the price of premium motor spirit, PMS, and improved food supply supported the pace of disinflation. However, headline inflation remains high at double digit, requiring sustained efforts towards moderating it further. The committee was, therefore, of the view that the steady deceleration in inflation across the 3 measures, headline, core, and food, in October 2025 suggests that the lagged impact of previous tight policy measures is expected to continue in the near term. Thus, maintaining the current stance of policy amidst lingering global uncertainties would allow the effects of previous policy rate hikes to sufficiently transmit to the real economy and further reduce prices. Members noted that the robust performance of the external sector, evidenced by the surplus current account balance and steady accretion to reserves, which have contributed to stability in the exchange rate and moderation in inflation. The MPC also commended the collaborative effort of both the fiscal and monetary authorities, which led to the recent upgrade of Nigeria's sovereign credit rating by major credit rating agencies and the delisting of the country from the FATF grey list. Members acknowledged that these positive developments would further boost investor confidence and improve capital flows to the economy. The committee noted with satisfaction the sustained resilience of the banking system, with most financial soundness indicators remaining within regulatory thresholds. Members also acknowledged the substantial progress in the ongoing recapitalization program, with 16 banks achieving full compliance with the revised capital requirements. The committee thus urged the bank to ensure a successful implementation and conclusion of the program. Price and other domestic developments. Headline inflation year on year further declined to 16.05% in October 2025 from 18.02% in September, driven by a moderation in both food and core inflation. Food inflation fell significantly to 13.12% in October 2025 from 16.87% in the preceding month, reflecting improved domestic food supply, stable exchange rates, and base effect. Similarly, core inflation slowed to 18.69% year-on-year in October 2025 from 19.53% in the preceding month, owing largely to a decline in the price of furnishing and household maintenance. Real gross domestic product, GDP, for the second quarter of 2025 sustained its positive trajectory, evidenced by the growth rate of 4.23% year-on-year, compared with 3.13% in the first quarter of 2025. In addition, the Purchasing Managers Index increased significantly to 56.4 points in November 2025, the highest in the last 5 years, pointing to a more positive growth outlook for the third and fourth quarters of 2025. Gross external reserves increased by 9.19%, reaching a high of $46.70 billion on November 14, 2025, from $42.77 billion at the end of September 2025, sufficient to cover 10.3 months of import for goods and services. Commodity pricing. Inflation is, however, projected to remain above pre-pandemic levels in the near term. Outlook. The committee's forecast indicates a sustained disinflation in the near term to be largely driven by the lagged impact of previous monetary policy tightening measures, supported by the continued stability in the foreign exchange market. In addition, the ongoing seasonal harvest cycle is expected to boost local food supply and further moderate food prices. The MPC reaffirmed its commitment to evidence-based policy approach towards achieving the bank's mandate of price and financial system stability. The next meeting of the committee is scheduled for Monday 23rd and Tuesday 24th February 2026. Thank you.
Thank you, Mr. Governor. That was communique number 160, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olaimi Kadusu. As per the norm, we take questions from members of the press. Please state your name, your medium, and ask your question. Nancy, one question, please. Thank you.
Yes, you are absolutely right. Happily, the macro is looking a lot better. Quite rightly that steadily, you're right, this time last year we're talking of 34 plus, and now we're down to 16. Now, I think, to your point, the issue of macro stability and the gains of macro stability. To my mind, this is the core of the matter, that to the extent that we have accomplished stability, stability is a very fundamental process in the road to growth. You recall, year and a half, 2 years ago, there was a lot of instability in our markets. And when there's instability, those who would normally invest hold, they stay away. Now we have moved from a situation where there is stability, and after stability comes investment, and after investment comes growth. And by the way, investment and growth could go hand in hand. They could, because it depends on which sectors you are looking at. And if you look at the sectors, you will see that over the course of the last couple of quarters, there has been growth. There has been. But the fact that we are now accomplishing stability gives greater confidence to investors who ultimately will invest, and so the growth and some of the issues you are talking about now become issues that are easily taken care of. And I'm almost certain that in the fullness of time, you will begin to see exactly what I'm talking about, that this is the way stability has a way of promoting growth and ensuring that it is stable and enduring growth, which is what we really need. What we don't need is anything that is short-term and cannot be sustained.
Good afternoon, Mr. Governor. My name is Indika Chedi of the Nation newspaper. Mr. Governor, sir, Nigeria's external reserve now stands at $46.7 billion. This is the highest in about 7 years. So, to you, Mr. Governor, what are the principles driving this growth, this accretion to the foreign reserve, and how does this compare with the reserve adequacy you consider optimal for Nigeria's external buffer, especially in the light of recent shocks?
Thank you very much. Well, firstly, let me answer the second question with respect to buffers and where we are on that. Right now, we're about 10 months import cover. And that is a good place. And to be frank, it is even more than it appears. It's more than it appears because you have a situation where there's significant liquidity within the market that unless you're a regular follower of these events, you may not see. So while we see that the results have gone up, respectively, there's definitely a lot more that surrounds that. Now, in terms of what have driven this, well, clearly we can see that, and it's something I've said in previous MPC meetings, that with a more competitive currency, you have a situation where there's more exports, there's a drive for greater exports, and that's why you find that is increasingly being the case for non-oil exports. Of course, we also know that for the oil exports, there have been increasing production, and we have come a long way from where we previously were on that particular line. Then, of course, you go to the IMTOs, the international remittances. All those have gone up relatively positively. And the good thing about all this is that we are building the reserves on a very systemic basis. Of course, because of the reforms that we are undertaking, portfolio investors are finding investment in Nigeria attractive, and they are coming to invest. So collectively, all those have contributed, and of course, we are operating a more open and transparent system which gives confidence to those who really and truly want to be in a country where they believe in its future.
Good afternoon, Mr. Governor. My name is James Major with this day. With a spread of less than 2% between the official and BDC rates, it can be said that the Naira is currently stable. How can you guarantee that this stability is market-driven and not policy-driven to offer temporary success? What specific reform or market mechanism are ensuring stability? Thank you, sir.
Now, again, let me go back and say something about our foreign exchange market. You see, what we have in the foreign exchange market in Nigeria today, to the best of my knowledge, is something that hasn't happened before. It hasn't happened before. In the sense that you have a market where there are willing buyers, willing sellers. They come in, they buy at will, they sell at will, and you have a process that is open and very transparent. And our EFEMS system is one that is open and very transparent. So you can see who is buying, you can see who is selling. It is that that gives confidence to markets. And it is for that reason that on average, on a daily basis, we have $500 million in turnover, in market activity, with many times the CBN not being a participant in that market. For those of you who will remember how markets used to operate in those days, if the CBN does not intervene, nothing happens. That is now a thing of the past. We have a market that is open, that is transparent, and that plays in accordance with certain rules that everybody has signed up to. So these are all the things that have contributed to the way and manner in which our foreign exchange market operates, and which we have had stability in that market. You're right with respect to the differentials in foreign exchange rate, which is now down to about 2%. And if you recall, at one point in time when we started, it was more like about 60%. Now we've gone through to a situation, we've crossed that bridge where few people don't make differences in the foreign exchange at the expense of others. Everybody has equal access to a market that has become very, very open and very transparent, and where there's willing buyer and willing seller, and you're free to come in and leave as you like. So these are some of the things that have definitely contributed to that. It's a more disciplined market. It's a far more disciplined market. There's policy consistency. There's an avoidance of policy flip-flops, so that those who are part of that market understand where things are going to. They can predict and they can plan. Those are the things that have made for a more functional foreign exchange market. And I think I would, make bold to say that for those of you who are constant travelers, you would have seen the benefits of that. Because when you travel now, gone are the days where you have to front load and be looking for foreign exchange all over the place. Those days, I'm sure many of you witness it. You can go with your Naira card. You can pay with your Naira card. If you choose to pay with your dollar debit card, well, that's your choice to make. But the choices are there. And the fear that used to permeate that industry and that market has literally disappeared. In actual fact, Nigerians now are very happy and very proud to hold the Naira. And that's a good thing.
Governor sir, my name is Imauja. I'm of Vanguard, Imauja. The government, of course your team, have celebrated the removal of Nigeria from the grey list of the Financial Action Task Force. I want to know, how in practical terms will this removal affect the inflow of trade finance, of foreign investment, as well as remittances from Nigerians abroad into productive areas of the sector? Thank you.
Thank you very much, Ina. Thank you. Now, let me say that the removal of Nigeria from the grey list is way beyond just a compliance issue. It's way beyond just a compliance issue. In actual fact, that is the easy bit. That is the easy bit. To be able to say, oh, we have complied. We have complied. But it has a lot of implications for Nigeria and Nigerians. As you know, for the past over 2 years, we have been on this grey list from FATF, which is the international body that more or less flows. Our exiting of that is a clear demonstration of the fact that, one, Nigerian agencies, and I must say this, collaborate very well when they choose to surmount problems. They collaborate very well. The Central Bank, NFIU, SEC, EFCC, Ministry of Finance, we can mention all of them. All the security agencies, incredible collaboration. And this is one of the things that was given special mention when the FATF team came to Nigeria for the final time before deciding whether to remove Nigeria from the list or not. It was cited as the #1 issue, that they could see close collaboration between all the different agencies, And the Vice President of the Federal Republic himself came personally, chaired the event, and they could see very strong commitment from Nigeria to exit that particular gray list. So it is not something to be taken lightly. The bigger challenge is to maintain what we have been able to accomplish. In a similar way, I spoke about stability. When you are able to achieve stability and you want that growth, which Nancy spoke about, you must do everything possible to protect it. If you fail to protect it and you go back, you bear the consequence.